So let's talk about some doom and gloom, shall we? Robert Kiyosaki. Um,
You ever heard of that guy?
yes, he's
Shout out to the legend. He was legendary at one point.
No,
Rich Dad Poor
he
Dad,
definitely is a legend.
rich dad, poor dad,
I'm not gonna deny that.
Cash Flow Quadrant.
for sure. Changed the game, for sure. But so he said, let's play the video, shall we? Mike, cue the video.
We're going to hit the March 2024 biggest crash is coming. And the guys with the ETFs and mutual funds and all that, they're going to stand over and bend up and kiss their ass goodbye. I wrote this book here, Who Stole My Pension? In 1974, America said to my generation, you no longer have a pension. You have to have what's called a defined contribution. So my generation, the old guys, I'm 76 years old. We have no money set aside for retirement, and the biggest crash in history is still coming, March 2024. And all those baby boomers who followed their financial planner's advice of the 60-40 equities, 40% bonds, how fucking stupid can you be? And they're going to get toasted March 2024. And I wrote about it in this book here, Rich Dad's Prophecy.
Well, from the words of Mr. Kiyosaki himself, March 2024.
All right.
Oh, Robert.
Wow. March 2024 will be the biggest crash in history. That's a month away. So interesting.
It's a
Interesting.
countdown.
He said all the guys with index funds and ETFs are going to get smashed. He said anybody with a 60-40 portfolio. We talked about the 60-40 portfolio. They're going to get screwed.
They've been getting screwed all year. They need an account of OnlyFans.
And he talked about, how the pension system. It's a very
That's the truth in what he's saying, but
it's yes, for sure. It's always truth mixed with sensationalism, right?
Yes.
But I mean, okay, this is something that he's somebody who's become a legend in the game of finances, right? So it's interesting to hear him have this take that it's going to all fall apart next month. If you're investing in ETFs, you're going to be screwed. What's your take on this?
This is what happens when you don't diversify businesses and you need a way to stay hot, and people usually do this through clout and sensationalism. The pension fund issue is partially true, but the biggest crash in history, you are meaning to tell me there's no catalyst that is being talked about that is going to lead to a crash that matches or mirrors the Great Depression? Impossible. I'll take the other side of that bet all day. In order for a crash to happen, you need a catalyst for it to happen. So even though the yield curve has been inverted, haven't had a crash. The banking system would have to collapse. They're letting all the small banks die or merge, so the banks that are too big to fail can have safety. Tech is doing incredibly well. AI is doing well. So they're setting up the new sectors that are going to lead the economy. We'll talk about Lily later. Healthcare is doing incredibly well. So you need a reason for the market to pull back. Also in March, once again, that's when a lot of capital flows into the market, and private equity has a lot of money sitting on the sideline to take advantage if a crash does happen. We haven't had the market activate its levers in, I don't know how, maybe 2 years, 3 years. So we haven't even had a 10% drop inside of a day. What is going to cause us to have like a 25% or a 30% pullback, which will halt the market? So I don't know. Maybe he was drinking that day. Maybe he was misguided. Maybe he wanted a great headline, but this is not happening. If it does happen, set your levels to 50% off from where we are now by then. But if COVID didn't send us into the greatest downward spiral ever, the COVID 22 that they're pumping out now isn't going to do it. So,
yeah, I mean, what are the indicators, right? Like, shout out to Josh. I was watching him the other day, and JC. Shout out to JC when he came on here.
yeah.
What are the indicators, man? Like, if we look at GDP, if we look at inflation, if we look at the unemployment, if we look at interest rates, which are, we everybody has predicted that they, obviously maybe June, could be March, as early as March, but they're going to be going down at maybe 5 times throughout 2024. What are the indicators that are showing this? I can't see them, and so it's tough, right? Like, and I remember when we sent this in the chat, I was like, that's interesting because we heard Michael Burry say something similar, and then we haven't heard from him in the past 6 months.
Shout out
right?
to Michael.
And no, I mean, we're not taking anything away from
it's
him.
true.
I mean, I was actually watching somebody who was sitting next to me on the plane was watching The Big Short, and I thought that was interesting because I thought so. I'm like, remember in August of 23, the recession was supposed to happen in sometime in September or early in January of this year, and we haven't seen it. So some of these predictions, I'm not. What are the indicators that?
And here's the thing: the data can be right, and the Fed can say, "No, we don't want the." They changed the definition of what a recession was in front of our face, and nobody did anything. Now, if you said this about China, 30% of all stocks in China have been halted. The index slid 8%. The Beijing 50 slid 5%. If he talked about China, I can see it. But even that, because of all the geopolitical threats that are going on, and we're starting to have like a deglobalization effect. If China market does fall 50%, we won't have immediate exposure to it, and it won't drag our market down. The Nikkei's doing well, the FTSE's doing pretty well. So I feel as if he would have pointed this crash to the Chinese stock market, he could have been spot on.
Yeah.
But to drive our market down 50%,
that's tough. You look at
before an election, all the student loans will be eliminated.
All those factors when you put into the pot, it's like, well, how is this going to happen, right? When we even talked about that. Like, look at the economic conditions, and probably maybe mid-year last year when we talk about delinquencies, those were up. That has changed. We talked about used car and new car sales. That has changed. And so we talking about student loans. That's now in fact we haven't seen a number of delinquencies that we thought we would. Could that change? Perhaps, but is it going to happen in the short term? Like, we're talking, we only got 30 days until March.
Here's how you know why. Last week they put out a stat that I think 89% of all the global debt is on a fixed rate. Why would they put that out? Well, if it was a variable rate, you could have a case. But if the majority of auto loan debt, mortgages, and credit card debt are locked into a fixed rate, then you can predict delinquency rates when people will pay it off. Like, I just think the comment was misguided. I think he means well. Peter Schiff is another one that reports some doom and gloom. There's a lot of truth to what Peter says. But the government is going to do everything in combination at the right time, especially with BRICS becoming more formidable. Saudi just joined. They are going to make sure that we don't have this big collapse where it could actually turn the tide. Because if we go into a 24-25 cycle while we're on the ropes and BRICS is getting stronger, that's when they could begin to make a stronger push. They're not going to let a recession happen, not this next year, and definitely not by next month.
They're on the clock.
So he said he would say stuff like this just to kind of sell his book, or just
this the Queen Slip approach. Flip, I love you, but sometimes online people want to be sensational to get the clicks and views.
But wouldn't this hurt? Like, let's say hypothetically the market doesn't crash, right? What does he say? Like, I miscalculated, or is the government
saying for the last 3 years? Well, it's going to come eventually. There's a lot of people, and if you are familiar with investing, you have doom and gloom reports and newsletters that have been predicting crashes since 2009. They haven't happened. Of course, COVID, we had a strong pullback. Quantitative easing went through the roof. You've had separate markets that have had issues. Inflations have gone incredibly high in certain countries. But there's a certain, if you're not educated, it's a certain sector of people that you can target, especially in the conspiracy wing, that you believe that a market is going to crash. Even after they reveal Zuckerberg's bunker, everyone was like, hey, go get colloidal silver, go build a bunker. I'm going to go get 2,000 pounds of beans. I'm like, man, if a meteor hits Earth, there's nothing we can do. So I'm sorry.
Yeah. I mean, if he's wrong, I don't know if there's a consequence for it, right? We've seen it.
If he's right, I'll come on here, shave off my head, and eat a turtle live.
A live turtle. Yeah. I remember sitting.
It's not going to happen.
2007. I think you were there. We sat down and we watched him speak about nickel being the commodity of the future, and how we needed to invest in it in 2000. And this is like 2007. Now it has almost 15 plus years past that. Nickel hasn't been the commodity of the future, nor anywhere near it. So I mean, what to make a prediction and not be right about it, I feel like that's just like the standard. And the thing is that you don't even have to speak about it. You can say, all right, I was wrong, and move on.
What's the sexier take?
Make a
The
new one.
market is going to crash. It's the worst crash ever, or get a safe 12 to 13% growth per year by investing in index funds. The crash always sounds, and for all my traders, most assets, whether it's real estate, stocks, media, if you do it right, water, oil, gold. I'll save that for the blackout, the other line I was going to say, but most commodities go up to the upside. Even in the destruction of civilizations and countries, when there's no more real estate to buy, let me knock some buildings over, and then I go over there and reinvest in that. Most assets go up in super cycles, 20 to 40 years. I talked to the Stock Club about this 2 weeks ago. Even calling for a crash, most crashes only last 18 months after they happen. The real money is holding on for the long term. He's pro crash, but pro gold. Gold is going to the upside.